Yes, so I think one first point to make is that the starting point at the start of this week for oil prices was a fairly low starting point. We were at basically the lowest level in almost 3 years. We have indeed, as you pointed out, risen almost 10% in terms of crude prices from the bottom Tuesday morning this week. But we're now essentially in line with our Q4 Brent crude price forecast. The risks to the oil price outlook are definitely significant and continue to be two-sided. Geopolitical uncertainty has definitely risen. But I do think that the geopolitical risk premium priced into oil markets until basically today was quite moderate, especially in terms of flat prices. Option markets started to price in a more significant probability of disruptions. But the price level itself, when we look at Brent at $77 per barrel, that is still slightly below our estimate of fair value based on the level of inventories. And I think that the reason why the risk premium had been fairly modest priced into oil markets was twofold. Number one, we haven't seen actual large sustained supply disruptions in the last couple of years, despite very elevated geopolitical tensions. And second, there is roughly 6 million barrels per day of spare capacity that may potentially come online and therefore offset any potential tightening effects from most geopolitical supply disruption scenarios.
Daan, if Israel and if the United States are now openly talking about targeting in retaliation Iran's oil infrastructure, then where does that take the pricing environment? And then, of course, there is the risk of a retaliatory spiral. If Iran is targeted, then shipping in the Strait of Hormuz could be targeted. Aramco could be targeted, as it was in 2019. Is there a non-negligible risk that we see a spike to $100 a barrel oil?
Oil markets are definitely pricing an increasing risk of supply disruption, an increasing risk of a spike. Using our pricing framework, we, for instance, estimate that if you were to see a sustained 1 million barrels per day drop in Iranian production, that you would see a peak boost to oil prices next year of around $20 per barrel, assuming no response from core OPEC countries, and a boost of just under $10 per barrel relative to our baseline if core OPEC countries such as Saudi Arabia and the UAE were to offset some of the production losses from Iran by producing more themselves and by continuing to raise production for longer.
Dan, I got